Welcome to Lesson 5 of the International Banking and Insurance course for the Belt and Road Initiative. This is Professor Tefero from Port St. Lucie, and tonight's lesson is going to concentrate on the services that Chinese banks provide domestically versus the services that Chinese banks provide internationally. Domestically, there's no international bank that can compete with China, and there's no international bank that can compete with the four major banks of domestic Chinese business. But outside of China, international banks will have a great advantage over Chinese banks. But let's look at the services that domestic Chinese banks offer their clients within China first. Um, let's concentrate on savings and loans. Now, savings and loans sounds like a very simple um, element to analyze, but actually, there's a lot more to it than that. In savings, um, Chinese people save a lot more money than the average Western person. The average Western person only saves 8 to 10% of their salaries, and they tend to only save 8 to 10% of their earnings over a lifetime, given the latest figures by 2020. Um, Chinese people, on the other hand, save between 25 to 35% of their earnings on a yearly basis and 25 to 40% of their earnings on a lifetime earnings basis, which means that Chinese people are far superior to Westerners when it comes to saving money. Um, they tend to save money much, much better than Westerners, not just Americans, but Europeans, Africans, Middle East people, any continent you'd like to name, or any country you'd like to name for that matter. So, um, given this fact, the Chinese savings banks are important institutions within China because they account for maybe 25% of the capital that is available for investment by the country itself. Um, in addition to this very strong savings habit that China has, they also have a firm loan program. Um, Loans in China are generally repaid at a higher rate of completion than loans from outside countries, outside of China. Why? Because when Chinese people make loans, they generally have a strong um, family tie-in for the loan. They're able to get guarantees from other family members, which means that the loan is more secure. There are a much lower loan default in China than there is in the West and in the United States in particular. So these two variables of savings and loan repayment make the Chinese economy a little bit stronger in these two areas than in the West and in the United States in particular. Um, this is great domestically for China. However, when it comes to the Belt and Road Initiative, um, all of this is off the table. Internationally, international loans for international cargoes, for ships that will be sailing in international waters and visiting international countries will rely on an international bank more likely than relying on a domestic Chinese bank or insurance company for that matter as well. Given this, um, we can see that Chinese banks will be um, fortifying their position of strength in savings and in loans, and probably conceding a great deal of international banking to the international banking community. So that's the analysis of Chinese savings and loans. Um, this is Professor Tefero from Port St. Lucie, Florida, signing off till next time. And I want everyone to take care, and I'll see you next time. Take care.